Hey everyone, today is Friday, the 16th of November, 2012, and this is Brian Shannon from alphatrends.net. Let's take a look at this market here. It was an ugly week for the market, obviously. The S&P 500 was down 1.2% for the week. Semiconductors down 2.4%. They came close to going negative again for the year, but we did get a little bit of a bounce here today, obviously, in all these markets. Oil bounced the most, up 2% for the week. But let's take a look at the action here, because we saw quite a bit of downside action here, and it remains below the declining 5-day moving average. So we're still looking at guilty till proven innocent. You can look at this and say it started to bounce a little bit today and maybe showing a little bit of stability. But again, we do have, you can look at this as here's a little bit of resistance near about 136.5, and we are below the declining 5-day moving average. So I still think you have to look at it as guilty till proven innocent. One potentially good thing, I suppose, is that we did find a little bit of support at this 61.8% retracement in the S&P 500. But of course, we're also below that 200-day moving average that we lost this week. And it's been a while since we've been closing below the 200-day moving average here in the weekly chart, not since the summer. But the market remains guilty till proven innocent. It's come down pretty far, pretty fast over the last several weeks. But again, we're going to have a lot of potential levels of resistance if we do get some bounce. Of course, the bigger level that broke this week at about 137.5 is also a likely area where resistance will be found. And we've got downtrends obviously intact in all the markets, really. So next week, maybe we begin to stabilize a little bit. It'll be a holiday shortened week, and perhaps we could get up towards that 200-day moving average, which is at 138.5-ish. So up towards the 200-day moving average, maybe we get a little bit of a bounce, but we're still below the declining 5-day moving average, so it's really not clear that the buyers are going to, in fact, take control. We had heavier volume today, and the market was up, so that's one semi-encouraging sign, but nothing to get excited about. Still on the long side, the Nasdaq, as we know, has been below that 200-day moving average for some time now, and it's getting into these levels where it spent a good amount of time this past summer, and again, well below the 200-day moving average, well below the declining 50-day moving average. When we take a look at the weekly chart, we can even actually, maybe go back to the monthly chart and say, since the 2009 lows, we've got this trend line that comes in really at about $60, and it doesn't look unreasonable maybe to head back down towards there by the time this sell-off has kind of completed itself. It does look like we should be able to get a little bit of a bounce, but ultimately we may be seeing this market down near about 60, and for the S&P 500, we've got this similar trend line that's down at about 128. I'm not suggesting that for a target, because that's too far away to really take seriously right now. But it is something just to kind of keep in the back of your mind. The Russell 2000 also, of course, this week it was down 2.8%, even after today's bounce of about 2/3%. Something's wrong with my charts here, but we've got a similar trend line in the Russell, down close to about, well, it's really, the trend line is a little bit further down, but 73 perhaps is an area where this eventually can find some support. But we've got the declining trend, that is lower highs and lower lows below declining 5-day moving average. The bigger level that was broken this week is about 78.5, 78.75 really, and that has the potential for resistance if we get a bounce next week. And basically we closed right here. I don't know why that candle is there, but the market has sold off pretty aggressively recently, and somewhat of a bounce wouldn't come as a surprise, but we're still just really looking pretty ugly in all these markets. Semiconductors are at 31.5, and same thing here. I got a screwed up daily chart. We had, of course, that 31.5 that a week and a half ago it looked like maybe it was going to try to hold support, but it never was able to get back above that 5-day moving average. And instead we've seen a continued sell-off in the semiconductors. They are also guilty till proven innocent. Perhaps a little bit of a bounce above 30.65, up towards that 5-day moving average, or perhaps even up as high as about 31.25. But it's a bounce and a downtrend is the way we're looking looking at it now. The financials did get down to the level that we had expected at about 15 and a dime, and just below that, of course, we've got the 200-day moving average. In fact, we may have even touched that. Today's low was 1506, and that actually did, you can see down the bottom here, 1506 was exactly the 200-day moving average. So a little bit of support maybe found immediate term in there. We've got a trend line off of the 2011 lows that maybe is going to come into play as well. But we had the bigger level of support broken 2 weeks ago, and it's been a steady sell-off since then. We're seeing maybe a little bit of stabilization in here, but this level that we had broken this week, the 1540, is likely to act as resistance. We've got a declining 5-day moving average in here as well. So it's just, there's a lot of repair that needs to be done in these markets, and we're not seeing the evidence of it yet, except maybe just a little bit heavier volume on today. That is, gold did sell off a little bit. That's what we were looking for, was for it to sell off as it had gotten a little bit extended, and it didn't hold the 5-day moving average this week. It's gotten pulled back a little bit further. If we look at this weekly chart, we've got this bigger band of resistance up near 175, 176. That's really the basis of the neckline for what's looking like an inverted head and shoulders pattern. Now, that would mean that we're tracing out part of the right shoulder in here, and then this is on the daily chart. We can kind of see it a little bit more clearly, and we're maybe tracing this right shoulder out. I think getting back above the highs for this week at about 168.5 would go a long way to help that right shoulder really form. But until we can get back up above that 5-day moving average, and the 5-day moving average flattens out, I think you want to stay away from gold as far as initiating any new positions. The US dollar was up into a prior important level, which is a 200-day moving average, and an area that's been important here throughout the year at about 22.25. So this has been an important area. It's a bounce up to these declining important moving areas in a prior level of support at 2.25 to 235. So this is the band of prior support. It's looking like it's likely to act as resistance. Let's talk about America's favorite stock, which is Apple. It got down as low as 505 today, 505.75. So it not only took out, it's taken out every single level that people were looking for support. And this week, was no different. We had seen that we were looking at the Fibonacci retracement over here off of this level, and the 61.8% retracement came in at the 200-day moving average. That failed to hold, and then we came down and broke below that 522.18 low right here from back in May, and it just continued to bleed off. Today we finally saw some really big volume in here in this hammer candle form, so it looks like Apple could bounce from here. It's still below a declining 5-day moving average, so it's still not looking great, but perhaps above this 535-ish level, we can get a little bit of a bounce, but we've still got these bigger levels of prior support that are likely to act as resistance. I was looking at the longer term chart on Apple, actually looking at the monthly time frame, and you can see if we take a look from really where this rally began in 2009, down just about $90 a share, and we take some Fibonacci off there, so we're measuring from this low to this high, a 38.2% retracement would bring it down right in here to about 470, and that's also approximately where we see this longer term trend line off that as well. So it looks like Apple's due for somewhat of a bounce maybe, and the way the stock trades, it can run 30, 40, 50 points and we'll still have a downtrend intact on this daily time frame. But eventually I think it's reasonable to think that Apple might get down below 500 and into about 465, 470 before it really the pressure comes off of it. For now, the last 2 days, it looks a little bit like an inverted head and shoulders pattern. It held the 2-day volume weighted average price and also held the volume weighted average price in here today. So again, the volume weighted average price is a great tool for the daily trend, and the 5-day moving average is really the dominant moving average for swing traders, I think, and you generally want to stay away from initiating longs while we have that declining 5-day moving average. Anyways, I hope it was a good week for everyone, and I will talk to you next week. Thanks for tuning in.